I'm John Kaiser in Vancouver, May 26th at the Metals Investor Forum. I am here with Cristiano Veloso, CEO and founder of Verde Agritech. Welcome to Vancouver, Chris.
Thanks, John.
Chris, I first started following your company back in 2008, 2009, when you had a very interesting concept, taking these billions of tons of glauconite, which are 9 to 10% potassium, but they're a silicate, very different from what comes from Canada's Saskatchewan evaporite fields, potassium chloride. You started off with a thermopotash process, then you explored how to convert the silicate into conventional potassium chloride, and then when the price of potash dropped back to $200 a ton, you went back to the thermopotash process, and then all of a sudden today, you just completed a pre-feasibility study which shows a staged, largely internal cash flow funded expansion from the initial 50,000 tons or so per annum all the way to 25 million tons per annum, which according to the PFS assumptions has an NPV of about $2 billion. It cost you $60 million to arrive at a process that was available to you back in 2009. What is it that changed? What is that thing you discovered that allows you to not do thermopotash or do conventional potassium chloride conversion?
What we found out was that by applying the natural mineral to the soil and allowing the soil microorganisms, the activity of the plant's roots, you could make those nutrients available, and in a way that you could get commercial yields, and in a way that you could have a number of advantages in comparison to applying a salt to your soil. This wasn't an overnight discovery. So when we started development of the project in 2008, we reviewed some papers that had been written about our mineral. And in those papers, the tests had always been done, when done with the natural mineral, had always been done just by putting it to a little pot in a short period of time. And whenever they did that, the results weren't very, very positive. So we looked at those tests and we just assumed we had to go after more sophisticated technologies, and that's how we spend a considerable amount of time and unfortunately money converting it into conventional potassium. The discovery actually came thanks to a professor in Brazil who was doing one of the trials on thermopotash. He had begun that trial in 2010, and there was a trial designed for thermopotash, but he asked us if he could also try some of our mineral. I remember asking him, so where are you going to do that? Because it's not going to work. He said, well, let's try. And it was a coffee tree up to first production. So the test took about 3 years to be ready, and we only had the results in 2013, and we were all very impressed when that field trial on coffee delivered those very positive results. But that was just one result. We had to go and replicate it with several commodities, with several different types of crops, in different types of soil circumstances to see if it would be replicated. So we did that for another 4 years with different corporate partners, universities, and we saw all the benefits you get from moving from a highly water-soluble, salt, chemical source of nutrient to a natural source of nutrient like the one we're developing. And we're very pleased with all the results we get in terms of yield, in terms of improvement to the soil, and very excited about this new phase of the company.
Yes, so the role of microbes, microbe populations, in all aspects of life is a really hot emerging topic, and you see it in all the discussion about gut bacteria, different populations affecting the health of the body, diseases and stuff like that. And of course, in mining, microbes and bacteria are constantly being explored as ways of transforming refractory ores so that there isn't a huge energy cost to liberate the target metals. And of course, in this case, it's the nutrients in agriculture. But because this is new, emerging concept, new science, you have this enormous farming business in Brazil that has historically relied on potassium chloride, and they dump it on their fields. And unlike in other countries like Canada and Russia, where you do not have your torrential rains and acidic soils, they lose a lot more of it. Just turns into runoff, so they have to end up applying more and more of this. But it works. It has worked forever. They're stuck using it, importing it. The PFS sees you going from 50,000 tons a year to 25 million tons a year of this product, selling it to the farmers. But getting the farmers to adopt it, what is this process going to be like? Obviously, your studies, agronomic studies, are still small scale. What does it take to convince the Brazilian farmers that this stuff actually works and is a great substitute for conventional potassium chloride?
It's simple. They need to try it. So before they try it in their own farms and see the results, no farm is just going to come to us and replace 100% of the potassium chloride they've been using with our product. So the initial tons we sell, call it initial 20, 30, 50,000 tons of product we sell, are definitely going to be the toughest tons we're ever going to sell. Once we've gone beyond that level, and farmers can now then see that the advantages and the results, things will get much faster for us, and we expect to see an exponential growth. So we have some farmers who would be testing very small plots, 1-2 trucks, but they actually farm several thousand hectares. So once they go through this learning curve and see the yields, they can see they can start placing the very big orders.
So does your strategy involve persuading a large number of farmers to carve out a small part of their cropland? Because obviously farming is low margin, and you can't afford to risk something that may not work. Is it going to just try and get a few gutsy ones which will do a reasonably large portion of their overall cropland, or a large range of them?
A large range of them, but they will always go for small plots to begin with. And then, but the advantage you have in Brazilian agriculture is that those farmers in Brazil, they are pretty big. So you look at, for example, sugarcane. The small sugarcane production module for ethanol, you need about 30,000 hectares. That would be about 45,000 tons of our product just from one little ethanol operation. If you look at the whole ethanol industry in Brazil, the whole sugarcane industry in Brazil alone, that would be about 15 million hectares. You have some big farming corporations in Brazil that harvest and that grow anything from 200,000 to 1 million hectares per annum. So you're really looking at anything from 300,000 tons of our product up to 1.8 million tons of our product from individual purchases.
So clearly, Brazil is not like Europe with many small farms all next to each other. They are 5, 10, 100 times larger, and so you've got a much smaller pool of farmers that you need to convince. And when they do carve out a part, it is a small fraction of their total, but it is a large enough sample that when they see the results, they will be statistically meaningful.
Correct, and the potential for exponential growth is so massive that we might even get from one group a potential demand in the millions of tons range from one sale. So one truck can turn in a couple of years into millions of tons of product. So it's a very exciting market to be part of, Brazil, no doubt.
So your PFS obviously made some assumptions about when these inflection points happen where suddenly everybody wants it and you're going to scale up then. How much time physically, assuming you have a permit in hand, would it take when all of a sudden you have, and instead of all these little 1,000 ton orders, they're all of a sudden asking for 10,000 ton orders, and you've got to go to a million tons per year. How much time does it take you to scale up to be able to deliver that?
Very little time. So if you look at the plant, we're about to initiate actual site construction. From when you place your order for the equipment to when it's expected to be fully operational, you're looking at about 5 months. So it's a very quick turnaround between demand kicking in and us being able to supply.
Okay. The government, from a government perspective, in light of how important farming is to the Brazilian economy, do they have any ringside seat in this process and are watching very carefully to see if indeed this is a solution to their critical potash import vulnerability?
Yeah, they're absolutely excited about the project, about what it can deliver to the country, how it can help the country reducing its reliance on imported fertilizers. They're also very excited about the benefits you have to the environment, to sustainability, from switching from conventional potassium salt to a natural product. So there's certainly big expectations on that.
Now you've done the numbers. You know that at the current potash price, you can sell it on a potassium equivalency basis and still make a reasonable profit margin over the 30-year life of your pre-feasibility study. You end up with almost a $2 billion NPV. What is the maximum of Brazilian potash imports that you can displace as you gradually ramp up adoption and supply of super green sand as an alternative to conventional potassium chloride?
Well, potentially 100%. We have enough resources to potentially make Brazil self-sufficient in potash for 50 years. But for us to be able to supply that much, we would need to have a higher potash price. So when we did the market study, when we did the pre-feasibility study, we used a $250 potash price, which was the lowest estimate among the price forecasts we could find. So we're very conservative. So that number is based on a very conservative number. Nowadays, it's no longer $250. Now it's $300. So perhaps if we were going to revisit our market study, you could even look at a greater production scale than 25 million tons where we got to. But certainly because of the size of Brazil and the transportation costs associated with moving a bulk industrial commodity, transportation costs, even in the country, starts eating our margins when we start having to sell too further away. We're lucky though, because the biggest market of Brazil is in terms of agriculture, the biggest commodities, the biggest type of farms as well. They're located very near to us.
And of course, when you're talking 250 and 300, you're talking about delivered to Brazilian port and offloaded into a truck ready to be delivered to wherever it's supposed to be applied, because that's a higher number than the $220 or so that it's in the port of Vancouver right now.
It's trading in Brazil at the moment, CFR for $300.
Okay.
And then you need to add your port costs, demurrage costs. Sometimes it takes a couple of months for an importer to be able to find a place to unload imported potash. Then you have a tax on transportation costs you need to add. Then you have the inland transportation costs from the coast to inland where we are, and most of this consumption takes place. Then you need to add a little bit of margin for the blender who buys and distributes it. And then you need to add the transportation cost from the blender, from the distributor to the farmer. So by the time the product gets to the farmer, you're looking at nowadays a landed price in Brazil of about 1,400 reais, which in US dollars would be, you would divide it by 3.6 and get your number.
That's today. What's it going to be tomorrow?
Exactly. That's why I'm laughing, because before I went marketing, when I left Brazil, the exchange rate was about 330 and went up as high as 375 in about a week. So there's a lot of volatility, and that depreciation of the Brazilian currency is very good for the farmers, because the commodities they sell are traded in US dollars. So it just means they're going to be making much more money. And it's also positive for us because it makes imported potash more expensive. And because we sell it on a we price our product according to imported potash, we end up getting better margins.
Now, one last question. At the start of our conversation, I talked about the $60 million you spent, including developing the Cambridge process for converting the glauconite into conventional potassium chloride. What if the unthinkable happens and all of a sudden potash supply from Russia and Belarus no longer becomes available for seaborne trade because of, say, some Middle Eastern and European conflict that either makes it physically undeliverable from that part of the world, or because the United States, say, creates these huge sanctions against Russia, and we see potassium prices skyrocketing back to $1,000 a ton. Is it feasible to go back to that Cambridge process? How much money would it take to get this to a level where you're sure to spend the billions to build this? And is this an option available for you in case of such an emergency?
It is. If the world needs us, we would help the world with that. And certainly after all the work we've done, we're ready to set up in this doomsday scenario an operation that could potentially be looking at exporting potassium from Brazil to those other countries. What we have nowadays in terms of potash prices is a very nice gentleman called Vladimir Putin, who is helping the world to keep food prices very low. So Putin, he controls a significant portion of the internationally sold potash. He controls enough supply that if he wanted, he could either exclude that supply of potash or just increase prices. And the immediate consequence of Putin doing that would be food prices skyrocketing. So the fact he has allowed to reduce the profits from the Russian companies and keeping a very low price, being such a good person to the world, he probably should be considered in Oslo as a potential Nobel Peace Prize laureate.
Of course, if he does adopt the strategy of shutting down supply for external markets and just keeping it cheap for domestic markets, and then global food prices go through the roof, and Russia itself is on a par with Brazil as an agricultural powerhouse, he would get the Villain Award.
Indeed.
Thank you,
Indeed.
Chris.
Thanks,
Talking
John.
with Chris Veloso in Vancouver, May 25th, 2018, Metals Investor Forum.